The South African Reserve Bank is likely to hike interest rates by a further 25 basis points today to 4.25% in an attempt to slow inflation. Well, that's the expectation by several economists, with the Russian war in Ukraine pushing oil prices to a 14-year high. Global agriculture and other commodity prices have also risen strongly. So there's pressure on our inflation here. Let's discuss this now with Hugo Pienaar, Chief Economist, the Bureau for Economic Research. Hugo, good afternoon. Thank you very much for your time. I guess, as usual, inflation would have been top of mind for whatever discussions and therefore the decision that the MPC would have made, as we'll find out in about an hour's time from now.
Yes, good afternoon. I think no doubt the Reserve Bank was already saying at the January meeting that the risks to inflation are on the upside. And since that January meeting, as you rightly say, especially the oil price has increased significantly. So there's no doubt the Reserve Bank will revise the inflation forecast upwards, especially for this year. I think the key question is how does their forecast look in 12 or 18 months' time? Because that's actually the key horizon over which interest rate decisions actually has a major impact on the economy.
A majority of economists like yourselves, your colleagues, your peers who've been canvassed for comments ahead of this afternoon in an hour's time or so in terms of that announcement by Lisicha Kganyago, the Governor of the Reserve Bank, have predicted a 25 basis points upward movement. Would you concur?
Yes, I think that's right. Look, I think the Reserve Bank has up till now signaled that they are comfortable with a moderate interest rate hiking cycle. Now, yes, as mentioned, the inflation risks have increased and it's actually starting to materialize, which suggests there is a risk that the Reserve Bank is more aggressive than 25, perhaps looking at a 50 basis point increase. But one has to juxtapose that against the likelihood that economic growth may actually be weaker now than we thought a couple of months ago, again, because of some of the spillover risks from the Russia-Ukraine war. So I think on balance, it does make sense for the Reserve Bank to, at this stage, stick with a 25 basis point move at a time.
Even if the outlook for inflation going forward, as this war is still with us, and of course the prices have gone up, even if the outlook might be a little bit gloomier than it was in January, you still do not think at this stage we'll see a 50 basis points, or could it happen in a few months' time?
Look, as mentioned, I think there's certainly a risk of a 50 basis points today. But just bear in mind that the inflation outlook over the short term has deteriorated dramatically with these very high petrol price increases we've already seen in March and likely to see again in April. But as I mentioned, the 12 to 18 month outlook, it's not clear that has deteriorated by much. So normally the Reserve Bank tries, and most central banks tries, to look through temporary supply side shocks or oil price surges. So to the extent that those shocks are seen to be temporary, the central banks can look through them and not, be hastily in their reaction. The key for the Reserve Bank is whether we see so-called second round price effects. So in other words, if input costs like petrol go up, do we start to see companies pass those input costs on to the consumer? We haven't really seen much of that. And I think before we see that trend emerging, again, I think the Reserve Bank will stick with moderate rate hikes.
Yeah, hopefully you don't think I am mad. Can we see an unchanged scenario where they've decided for now to leave the rate as it is?
I think that's probably the most unlikely of the three. So if you say 25 basis points, 50 basis points or unchanged, I would give a very low probability, almost zero, to an unchanged verdict this afternoon.
Yeah, besides the oil prices, which have gone so much higher, as you say, what other factors would be impacting on the inflation? Consumers are already facing very, very tough conditions.
Yeah, so it's petrol, but then food as well. Now, once again, food is sort of coming to a large extent from the rest of the world. Much higher wheat prices we've seen the last couple of months. Our domestic wheat prices have also started to increase. So again, it's the same question that the Reserve Bank does not tend to react to an external food price shock or a petrol price shock. It's rather once these shocks, if there are persistence in these shocks and they start to feed through into broader price pressures, then the Reserve Bank becomes really concerned. Now, once again, we have not seen that as yet. We have not seen inflation expectations become dislodged. But the Reserve Bank would be very much guarding against that from happening. But because, at this stage, we cannot say that we're there yet, again, I think it is prudent not to be overly aggressive with rate hikes at this stage, especially given the fragile state of the domestic economy, the high unemployment rate, etc.
Thank you very much for your insights. Hugo Pienaar there, Chief Economist at the Bureau for Economic Research, just giving us some predictions or forecasts or previews and insights ahead of the announcement in about an hour's time from now by the Reserve Bank Governor, Lisicha Kganyago, of the decision of the Monetary Policy Committee, that's the MPC of the Reserve Bank, what they have decided to do with interest rates. A large number of economists expecting another 25 basis points increase. Few think it might stay the same, but it's unlikely, Hugo Pienaar says, because of the pressure that the oil prices have brought on inflation in the country.